Hi everyone, now we're going to look at my pick of the 7 best stocks for generating passive monthly income. Dividend stocks are some of the most attractive assets you can own to achieve financial success. My list includes a mix of well-known and reliable companies that have consistently increased their dividend payouts over the years. Some of these companies are even owned by the greatest investor, Warren Buffett. In this video, we'll take a look at my top 7 dividend stocks that can provide a steady source of passive income and long-term growth. But before we dive into the details, let's quickly define what dividends are and the benefits they provide. In simple terms, dividends are payments made by a company to its shareholders as part of its profits. When a company earns profits, it may decide to reinvest the money back into its business or distribute it to shareholders as a reward for their investment. For example, if a company declares a dividend of 50 cents per share and you own 100 shares, you will receive $50 in cash. Dividend payments are a positive sign for a company because they indicate that it is profitable and financially stable. Some of the companies on my list have been paying dividends for over 50 years. Once they start paying you dividends, you may decide to invest them back into the company to increase your income. This is one long-term strategy you can use to grow your wealth. The first stock on my list is Procter & Gamble. This American company owns several well-known and trusted brands such as Tide, Pampers, and Gillette. It has a strong competitive advantage and is likely to continue to generate steady income. It currently offers a dividend yield of 2.55%, which translates to a payout of $3.07 per share per year. The payout ratio is around 59%, leaving the company with enough retained earnings to invest in its business. Procter & Gamble has a long history of paying dividends and has been steadily increasing them for 67 years, making it a true dividend king. The dividend growth rates over the past 5 and 10 years are about 5.7% and 4.8%, respectively, which is a testament to the company's commitment to rewarding its shareholders and its ability to generate stable cash flows even in tough economic times. The second stock on my list is Home Depot. This is the world's largest building materials and home improvement company. Home Depot offers a dividend yield of 2.44%, which may not seem high, but translates to a healthy $836 per share per year. The payout ratio is around 52%, which means it has plenty of room to reinvest in its business while maintaining its dividend payout. Home Depot shareholders have seen dividend growth rates of 16.4% over the past 5 years and 20.7% over the past 10 years. The company has increased its dividend payout for 15 consecutive years. Home Depot is a good dividend stock because of its consistent above-average growth, reliable income, and healthy payout ratio. Its stock is a trusted friend that will always help you get through any task. The third stock on my list is Coca-Cola. Warren Buffett has held shares of this company since 1988. Coca-Cola is a global beverage company that owns many popular brands such as Sprite and Powerade. It offers a dividend yield of 3.08%, which is higher than the industry average, and pays an annual dividend of $184 per share. The payout ratio is 72%, which may seem high, but the company has an impressive history of consistent dividend increases over 62 years, which demonstrates its ability to generate cash flow and earnings even during economic downturns. Coca-Cola's dividend growth rate over the past 5 years is 3.4%, and the company's ownership is 5.2%. The company maintains a healthy balance sheet and boasts a strong brand portfolio, which provides it with a competitive advantage and stable earnings. As a globally recognized brand, Coca-Cola is a solid asset that can pay stable dividends and promises a bright future. The next stock is J.P. Morgan Chase. This is a well-known financial institution that provides a diverse range of services, including investment banking, asset management, and private banking. The company also has a significant presence in credit card services in the U.S. and Canada. J.P. Morgan currently has a dividend yield of 2.44%, which is above the industry average. The company pays an annual dividend of $44.20 per share, making it an attractive option for income-seeking investors. In addition, the company has an impressive track record of dividend increases for the past 14 consecutive years, with increases averaging 12.9% over a 5-year period and 13.7% over a 10-year period. This consistent growth can be attributed to the company's strong financial performance, which has allowed it to maintain a healthy dividend yield and the flexibility to invest in future growth opportunities. The company's recent stress test results are also positive, pointing to a strong future. The next stock to look at is Chevron. This is a multinational energy corporation primarily specializing in oil and gas. Chevron is a popular company among investors, and their stock has consistently increased its dividend over the past 36 years. Currently, the company's dividend yield is around 4%, with an annual dividend of $6.04 per share. Chevron has a comfortable payout ratio of 45%, leaving plenty of room for reinvestment in the business and potential dividends. The company has successfully increased its dividend by an average of 5.8% over the past 5 years and 4.2% over the past 10 years. With a healthy dividend yield and reasonable payout ratio, Chevron is a solid bet for investors looking for a steady stream of income. The next stock to consider is Johnson & Johnson. The company has been around for many years and is a giant in the healthcare sector, producing a variety of products from well-known brands such as the Tylenol patch and Neutrogena. Johnson & Johnson has a diversified product line, providing a wide range of revenue sources. The company has paid dividends for 62 consecutive years, making it the dividend king. Johnson & Johnson's dividend yield is about 2.95%, which results in a payout of $476 per share per year. The dividend growth rate over the past 5 years has been 5.9%, and over the past 10 years it has been 6.3%. The company has a history of consistently rewarding shareholders and generating cash flow. A payout ratio of 34% leaves room for further growth, making Johnson & Johnson a solid bet for investors looking for a steady stream of income. The last stock on our list is PepsiCo. This is a multinational corporation that produces food, snacks, and beverages. PepsiCo serves a wide range of customers and has a portfolio that includes well-known brands such as Pepsi, Lay's, Doritos, and Gatorade. PepsiCo has a dividend yield of 3%, which results in a payout of up to $58 per share per year. The payout ratio is 78%, which may seem high, but the company has a long history of paying dividends for 52 consecutive years. The dividend growth rate over the last 5 years has been 6.9%, and over the last 10 years it has been 8.1%. PepsiCo's product diversity, strong brand presence, and financial strength make it a solid choice for investors looking for a steady stream of income. So the companies on our list have a strong history of dividend payouts and increases, making them attractive to income-seeking investors. However, it's important to remember that investing in this type of stock is only one part of a well-rounded investment strategy. Diversifying your portfolio and considering your risk tolerance and long-term financial goals are also important. Always do your research before investing in dividend stocks.